You should text you that.
It's on that phone.
Good morning, everyone. Welcome to BizChampz Live, where business, community, and real conversations come together. We're excited to be here today. I have lovely guests this morning. I have my co-host, Cynthia Nowlin. We have Tiffany, and then we also have Tramaine here. I will do formal introductions in just a second, but we are very excited to be here today. We're bringing you another powerful episode spotlighting what's happening in and around our community. Today, we will be talking about myths in home buying, especially amongst us business owners. So I will pass it over to Cynthia so she can introduce our guest this morning.
Oh, I didn't know I was introducing guests. Well, everyone, I'm excited to be here, and I thank Shell for allowing me to be her co-host. It is always a great opportunity to talk about very important things in the community. So I'm gonna do a little caveat. I'm gonna flip it and let our guests introduce themselves. Who better yet to introduce themselves? To my left here, we have Tiffany. We're gonna start with you first, please. Can you share with our guests all the great things that you're doing and a little bit where you're going in the next couple of years and all your goals and outline?
Sure, thanks, Cynthia. My name is Tiffany Cahee. I'm with Ready Mortgage. Been doing financing for 30 years in the banking and credit union industry. I also have my own credit union, which is Common Good Credit Union. Right now, we are online. We don't have our brick and mortar yet, but we're doing basically loans, and we're going to grow into each individual depository accounts and other funding advancement. I also have resilience residential services where we help at-risk youth and giving them a stable environment. What I want to be doing in the next few years, run multi-million-dollar business.
Yes, of course. Well, we really thank you, and we're glad you can make it out this morning.
Thank you for having me.
And congratulations on the credit union.
Thank you. Thank you.
Well, I'm Tramaine, and I should have went first because I can't follow. Well, I'm Tramaine. I'm with the Real Estate Direct Group. I'm a broker owner. I've been in real estate for over 20 years. I've been a licensed realtor for about 18 years. And prior to that, I did do mortgage loans. Mm-hmm. And I think I'm pretty much on every governmental political committee there is with my real estate association and a lot of things in Fort Bend County.
Yeah.
Just a quick question. What are they about these interest rates? Are they going to go down?
It's up to the Fed. I mean, the federal bank. A lot goes into the interest rate. The economy, push from the president. There's a lot of factors that go into lowering interest rates.
I have a couple of colleagues that are looking to buy a house, but they're waiting because they're hoping that the interest rates will go down. And there's the thing is, I know there are a lot of first-time home buyers, and you look around the communities and you do see a lot of buildings still going on. And a lot of times you drive down the street, you're like, well, where's the money at?
Yeah.
Who has the money? But it's like, who's building? Who's buying?
Yeah.
You know, so that's always the question that I ask myself.
And when you say go down, is there a specific number? Because they've gone down now, dropping to 3% and 2%.
Well, I'm gonna be honest, I got 2.5.
Yeah.
I got a 2.5, but I do understand that was back in the day, and they may never be as low as they were back then. Mm-hmm. However, it would be like nice to see them in the 4s and 5s.
And Tiffany can probably elaborate way more than I can, but I think one of the things with the interest rates, they drop for a reason. So if the economy is not doing well and it's affecting other markets, we tend to see the federal bank drop the interest rates. But where it was at the 2% and 3%, they were trying to build up the industry because we were going through COVID. So people were in their homes and were not buying. So Tiffany, you want to elaborate?
Okay. So when I get that question asked, and why everyone is asked, and just to what you said, we'll never see those 2% rates anytime soon. So I tell people, if you're looking to buy, go ahead and buy. Don't wait for the rates to drop. And as you said, that they'll drop already. If you're looking to stay 4%, now I wouldn't even tell people to wait for that to happen. My thing, what happens is you'll probably the lowest you'll see is a 5.5. If you know, but don't let that stop you from buying. The buying power is still there. There's ways to get around lowering and paying off your mortgage in less years than you initially go into that loan with. So it's just if you're going to be, I'll tell people all the time, make an extra payment a year. I don't care if the rate is 2% or 6%. Make biweekly payments. The overall APR is what you're going to be eating at, because bringing and learning how to bring the years down versus your interest rate. Learning to where I can save more money on other aspects in my life to bring down this 30-year mortgage to 15 or 10 years. Can it be done? I always say, whoever's doing your loan, ask your mortgage professional. They can give you an outline of saying, hey, if you do biweekly payments, you can pay it off in 10 years, 15 years, 20 years.
Yeah. So one of the reasons we wanted to bring you both in is there is a lot of misconceptions when it comes to small business owners, thinking that I'm not able to buy a house. I have personal income, I have business income, but is it enough? How do you make that introduction when you start talking to small business owners to even know, like, yes, you are able to purchase a home? Like, how do y'all structure that?
It is a 1099 person.
Yeah.
It can become complicated because, hypothetically speaking, a lot of business owners write their income off.
Yes.
And sometimes you can write it, take so many deductions and lower your income. Now it looks a mess. You can make $200,000, but on your tax returns, we're showing 100. And
Okay.
and now you want a $500,000 and $600,000 house, but the math is not mathing with the bank. So there are a lot of different loan products that are available, but like the rates, you're going to pay a higher rate if you get those programs. I started in subprime. We had all these acronyms: SISA loans, AMINA loans, where literally you just put your income on there, and you get a hit in the rate. A lot of those rates were in the 7s and the 8s, but we now, because of what happened in the subprime crisis, the banks, they want to see your bank statements. They want to see a lot of things. So if you're a self-employed person who do write off a lot, keep your bank statement. And you're just going to have to put more down. There's some, and you probably can elaborate, there's some lenders that take full doc loans with bank statements. They may require 12-month bank statements. But just be prepared that you're going to pay for, you're going to not pay, but you're going to have to provide a lot of documents. There's loans, FHA, conventional loans, where you can use bank statements, but they're going to ask a lot of questions. So don't get mad at your loan officer.
So getting a loan is possible. It's just figuring out the route.
Yeah, very possible. There's so many new programs, not taking away from the conventional, like you mentioned, FHA, VA loans. I tell individuals, I don't care what you do. There's right now, from when I was being in the industry 20 years ago, it has changed a whole lot. There's a lot of programs. There's non-QM. So people are out there, investors are out there that makes their own programs that are saying, hey, look, I'll lend you my own money to get you in a house. There's hard money lenders. Now, my thing is, if you're going to go with that, you be mindful that you can't be a rate conscious borrower, because these people are taking very minimal information from you and lending you hundreds of thousands of dollars based on what you told them. So your rate will reflect the information that you're able to provide. And so that will not stop a small business owner, a self-employed borrower from purchasing a home. It just depends which product fits your scenario.
Right. That makes sense. So one of the things I know is you can go online,
Some people, they can get
a pre-approval, and then they're like, I'm good to go. But is that all the work that needs to be done, is getting the pre-approval?
Oh, no. So there's pre-quals there, which is basically a credit check. Whatever you say, we're going to look at your credit, and whatever you say, we're going to base a pre-qualification off of what you say. A qualified loan or a pre-qualification, now they're reviewing income documents.
Okay.
And they're matching your credit, what you say, and your documents, and that's called a pre-qualification. It's multiple terms.
Yeah.
But when I have clients that, once again, most of my work is real as the realtor. But before we go look at a house, you have to have a pre-qualification. I mean, a pre-approval, not a pre-qualification.
Yeah.
Because it's not a full approval. Now, once the house is introduced to the qualification, that brings up a whole nother thing. But I would get a pre-approval. It can be called a TBA, underwriting approval. I mean, there's all kind of acronyms.
Right.
But what your realtor should look at is when they see your pre-approval, that the box has been checked, that your income has been verified.
That's correct.
So one of the things that you mentioned earlier that kind of caught my attention was bank statements.
Mhm.
So I know when I first started looking for a home as a business owner, you had to be in business for at least 2 years.
Mhm.
They wanted, like a whole financial package. What does that look like today?
Today is basically the same thing. Of course, every lender wants the stability.
Right.
The stability is saying that I've been in business at least a year or 2 years, seeing 3 years is favorable. But they will still look at it as if you've been in business 1 year, and then I'm speaking on the non-QM.
Yeah.
And so what that means is, hey, I've been in business a year, but I'm not showing a loss.
Okay.
I'm showing that I'm making money. They also will look at the industry you're in. Is that an industry that is continuous? So say if I'm in healthcare, any type of healthcare, or, say that I own a hospice company or home health company, I'm self-employed. Are those businesses going to go out of business soon? Well, that's in healthcare. We know that no matter where you are, some type of healthcare is going to be needed.
Okay.
And so that makes a difference. Now, on the conventional side, you need at least 2 years.
Okay.
So again, it depends on the program, on the type of business. You're needing anywhere from 12 to 24 months bank statements on that.
Okay. So you're saying sometimes your business type, the risk can be a factor.
Correct.
So in that instance, is it safe to say they need like more on the financial side, like more down payment?
Yeah, it'll be more down payment. Because again, it depends on the type of property that you're going to look at as well. So if I'm making a certain amount, typically they're going to want to see 20% down.
Right.
In some cases, depending on your situation, I've saw it where they want to see 30 to 35%.
Okay.
Again, every scenario is going to be different because every individual is different.
Yeah.
But I do have lenders that will do 5 to 10% down, and this is on a non-QM. This is with not conventional financing. Again, the times have changed so much to whereas investors are giving deals that it's like, I'm like, this is outrageous. And I'm like, wow, I never saw that when they were doing no income, no doubt programs back in the day,
Yeah.
And so I'm like, okay, well, fine. But they're out there. I've never saw a situation or a scenario that I can't do. It's just is the client ready?
Okay.
Yeah.
You were kind of saying that to me yesterday in a conversation we had. some clients, it takes longer. It's not that you can't get them in a home.
Yeah.
It's just the process for them is not as streamlined.
Exactly.
Yeah, and sometimes people get mad at the loan officer, but just do what they say.
Right.
If you turn in the documents, and I have a hilarious story because Tramaine is crazy. Years ago, one of my friends, I have a couple lenders I use, and when we have clients that I know they have the money, but we have an issue with maybe the bank taking them on, I'll send them to her. I referred her to another agent who had a client that was a stripper. She was, professional dancer. She was able to get her approved. It took some time, and also you have to look at your taxes. Like one of the issues that we see sometimes with self-employed people that have all type of contracting jobs, they don't file their taxes like they're supposed to.
Yeah.
So those play a factor in it, but she was able to get a loan, and forever I still joke with her as the lender that financed the stripper.
She
made
it. She got it happen.
But
it's creative finance.
Yeah, but it was a good. She had a good rate. It was a full doc loan. It was a full documentation loan. And you hear these acronyms QM and full doc.
Right.
And so full documentation is probably the standard loan where you're putting less than 5% down or less than 10% down. And so if you have a good credit score, your income is verifiable, those type of loans, you typically have the lowest interest rates. When you look at non-QM, or there's 50 million acronyms.
Yeah.
And basically you're gonna put more down and you're gonna have to pay a higher interest rate. But one of the things we do work with sometimes are builders. I have relationships with builders where they may do buy downs for you or give you extra money to put down on your home. But before we show a house, before we start getting into what they want as far as pricing and location, I send them to a lender, and that lender is going to diagnose you on what you can buy. And I can't stress enough, listen to the lender because they'll navigate you through.
What would you say is like one of the biggest mistakes that entrepreneurs make, small business owners make when it comes to the home buying process?
Fear. I'm in a roller coaster industry right now. And we see, people that can buy homes. Like I give you an example. I have a listing right now that's $4,300 a month.
Yeah.
I get people that make $200 and $300 a year, and they've been in business for over 10 years. And I'm like, you don't want a house. Right. Their credit is good, but it's but I think sometimes we and it's not we want champagne service with beer money, but I think the idea of I can lease in this gated $1 million community at $4,000 and $5,000 a month, but if I purchase a home now, I'm going to be in a 250 or 300 working class community.
Okay. Yeah.
What people don't realize, every year the rent is going up.
Correct.
And sooner or later, your income is not going to
be enough.
Yeah.
Mm-hmm.
So I would stress, just call a lender.
Yeah.
And try. And that's the biggest thing to do, is just call a lender and just see what they say.
I have a question. Sorry, guys, audience, I'm having technical difficulties, but I'm still here. I've been seeing lately on the internet about mortgage insurance. And no one really educates the buyer on purchasing mortgage insurance because there is an additional cost for that. When my dad passed away, luckily he did have mortgage insurance, so it was about $20,000 that was paid off due to his death. Talk a little bit more about that, because I'm seeing it more and more on the internet. Buy mortgage insurance just in case you get disabled, in case there's a death in the family. That way your family doesn't lose their home.
Oh, you talking about?
Yeah, I was going to say that. So there's a difference. When you say mortgage insurance, there's PMI, which is private mortgage insurance. So that you don't have to buy. The lender will basically have you on it. because you're putting less than 20% down on your loan.
Okay.
And so that benefits you in no kind of way,
Okay.
as far as if something happens. So what I tell clients, especially clients that have not really educated themselves on mortgages and are first time home buyers, entrepreneurs, whoever it is, I always let client know that, hey, anytime you buy something for 10, 15, 20, 30 years, you're gonna, I have to get an additional insurance policy to cover that.
Okay.
And so what it is it's an insurance policy that they will get, and it's, I don't offer it. There's insurance agents, and you might know someone that covers it. But what that sells it, and what it does is you get it to cover your mortgage just in case you get sick, you're hospitalized, you can't work, or a death. So whereas you're not leaving that burden on your family, and that way that insurance policy can now pay that note out.
And during the subprime crisis, I became an insurance agent. I was everything but the Pope. But I did sell insurance. So Tiffany mentioned there's a private mortgage insurance that's required by many banks if you put less than 20% down. Also, it's similar to life insurance. I would talk to an insurance company and see if they have maybe life insurance, because if it's an issue where if the person dies, the bank, you have funds to pay it off, then you probably can come out less per month or less overall if you just put it in a life insurance. But talk to a life insurance agent, because I'm no longer life. But I think it's a good program, especially if you are young and it's a husband and wife that have kids. But the older you get, if you're getting new mortgages, hopefully you have some life insurance in place. But those are good programs to have.
Yeah.
So when we come to you, and this will be for Tiffany, if I come to you and I want to purchase a home as a small business owner, I know a lot of, and that's kind of why we're having this podcast, because it's a lot of misconceptions. Like, my credit isn't perfect, so I know I'm gonna get a no. I started my business, a couple years ago. I wrote all my taxes off, so I don't really have much to show for income. My bank statements might show that I run my business and my whole household out of it. So it's a lot of those factors, right? And it's, as Tramaine was saying, I live in, this beautiful $1 million community, and I've been renting for all this time. Can you help me?
Yes.
Even though I have all of those barriers.
So there's ways to help an individual in that scenario. So one of the first things, and to go back to the question you asked prior, what would be one of the first things is that entrepreneurs make the mistake is the key of, like Tramaine mentioned, they go to their tax preparer and they write everything off.
Yeah.
First, as an entrepreneur, the first thing you want to say, if you're not going to buy a house within the next year or two, talk to whoever prepares your taxes. Let them know, hey, I'm interested in purchasing a home within the next year or two. I want to get prepared for that. So everything is preparation. So when you're telling your tax preparer, what they'll do at that point now is tell you, hey, you need to show some income. Because if I prepare your taxes and I'm writing off everything, there's no income to show.
Yeah.
So your debt to income ratio is going to be extremely high because you have these bills, but you're not making money. And then also, I always tell entrepreneurs, you have a business. If for the last 3 to 5 years you're showing all write-offs like you made nothing, that's a red flag for IRS.
Yeah.
You're in business 10 years, then you've never made nothing. I'm going to want to.
How are you surviving? Yeah. How are you surviving?
And so I did talk to an IRS professional. She's actually one of the supervisors, and she said that's what they look at. They look at small businesses that are not showing that they made. I don't care if you showed you made $100. show that you mean something.
Oh, wow.
Yeah. So especially when you are trying to buy a home, you want to talk to your tax professional and start to show some increase.
Yeah.
Because you can't be in business 5-10 years and all you're doing is loss. Well,
Right.
at that point, I would tell you need to get a regular job.
Right.
You
You're a
know.
huge risk.
Yeah. And
Yeah.
and then I'm trying to save you guys from getting audited as well, because I didn't even know that until recently that they start to look at that now.
Mhm.
It's a trend, and they randomly will pick
A
businesses and audit them.
Yeah.
And so but back to your question, even if an individual comes to me like that, I do upfront tell them, hey, so for conventional or any Fannie Mae type loan, you're gonna fall out of that box only because people don't realize Fannie Mae is the government.
Yeah.
So if you're telling the government, I'm not making money, but I want one of your type of loans, you won't fit. in.
You won't fit.
Okay. And so I then tell them, these are your options.
Yeah.
There's hard money lending. This is what you have to go on. And then, can I still get you in a home? Yes. But this is what you're going to look at. You're going to have to have some mattress money or something.
Yeah.
Waiting somewhere with a 20 to 30% down. Even if I can get you less than 20% down, the thing is, are you credit wise, are you showing any type of credit, anything that's on your report? So early on in my career, I used to just more so just take, oh yeah, I'm doing this, and just take them and trying to get them qualified. Now I'm educating them.
Okay.
And that's the key so if anyone is looking for a property or, what they know they want to do within 6 months to the next year, start now and getting prepared. Talk to a lender, like Tramaine has been saying. You talk to a lender so that way they can tell you, hey, this is what you're going to need. This is what we're going to look for.
Mhm.
So even if your situation is this, and I can't go back for the last 2-3 years, but I can now tell you, okay, from this point on, this is what you need to do.
Right.
A person may not want to wait that long and say, okay, well, another thing I can say, okay, well, you need to go to your CPA, get your financials, what is it called when they redo them?
Yeah.
But I went blank, sorry. And then you can go back and change what you filed for the prior year or two.
Okay. You
show
can make an
money
amendment.
And make an amendment, yeah. And if you go and amend your taxes, you can do that. You may have to pay and get on a payment arrangement. So whereas now you can purchase a home.
Okay.
So there's still options and ways to help.
So for you, if I came to you first, I didn't go to her, I came to you. I was like, I want to buy a house. The house down the street is for sale. I've been renting in this neighborhood, for 7 years. I pay $8,000 a month for my rent.
Mhm.
I want to buy this house, but I don't have anything together.
Yeah. So the first thing that I'm going to tell you to do is talk to Tiffany.
Yeah.
So I would say call Tiffany, and then I'm going to call Tiffany and say, hey, I'm sending Cheryl.
Right.
She's interested in
Yeah.
purchasing a home. She doesn't know where she is. And we go from there. So typically what happens is when we send them, because the first thing they do is call me and say, I saw your house on blah, blah, blah.
Right.
I want to take a look.
Right.
We're not going to show you.
Yeah.
Now.
Yeah.
Yeah.
You qualify.
Yeah, you qualify or you're paying cash.
Yeah.
But that's the first thing. And I always spend each time somebody calls, I spend about at least 30 minutes with them.
Yeah.
Because I know when they call that lender, and a lot of lenders I know are compassionate.
Yeah.
But I know they're going to be crushed if they're not approved. So the first thing I'll do is counsel you and say, hypotheticals, this is what may happen. And if you get denied, we're going to talk with the lender with your permission, and we're going to work on a plan to see what you need to do to get approved.
Okay.
So when they go to Tiffany, then Tiffany is going to work on them. And sometimes approval is not quick. Approval can take over a month.
Yeah.
Because what they're doing, now a lot of loans I do with DSCR loans, they're investor loans. They're loans, you may not want. I'm actually living in the home. If you're living in the home. But what they're going to do is they're going to walk you through what you need to get done.
Yeah.
And so sometimes it's just like in the doctor office. Sometimes we go to the doctor office when we've broken down. And so the doctor got to give you this to fix this first. So in order to fix another problem that's happening. So that's what the lender typically is going to do. So, don't have an expectation of a time, right?
Right.
And just be patient. If you feel like the lender is running you around, you can try to go to another lender. If I have clients that are apprehensive about going to, not Tiffany per se, but it's not the big banks like the Chases or Wells Fargo. Right. I'll tell them go ahead and try with them and see what they say. But a lot of times they're going to work with you so far.
Right.
But those privatized lenders are smaller mortgage bankers. There's 50 million terms credit unions.
Yeah.
They're going to really work with you. So that's the first thing I would tell you.
I think from my experience, you can go to like Zillow, to those websites, and they'll have like a mortgage calculator. And they'll ask like how much you're paying for your rent, and then because of that calculator, people are like, oh, I can afford a $2 million home because they looked at that.
No.
That's not accurate.
No.
But I think, so when they look at that and they talk to you, I feel like they're crushed,
Right.
Because it's, I know someone who's paying that much in rent and they want to buy a house, and everyone they've talked to was like, you can't buy a house here. You have to buy a house over there.
That's equivalent to you are sick. You don't know what's wrong with you, and you typing in your
WebMD.
Right. GPT. Like, what's wrong with me?
Go to the doctor. So that's the biggest misconception. And I think with the Houston Association of Realtors, I think we have the best association in Texas, probably in the world. But we have tools, but even those tools have flaws because you don't know what the tax rate is.
Okay.
There's also more private mortgage insurance. There's other factors that are in hand.
Okay.
And so what they're doing, they typically giving you the mortgage and the interest.
Yeah.
They're not giving you all the other stuff.
Everything else.
Expensive.
Yeah. So owning a house it takes a lot. It takes a lot.
But isn't it also true that some of the counties have funds for first-time home buyers, down payment assistance programs?
Yeah, they have programs. You do have to qualify for those programs. So I don't like to put out the misconception to people that these programs are for everyone. I have people like, I want to use this, and I've had clients that come in, okay, we can start in, I'll try, and I'll put you in, and let's see if you qualify. And then they're crushed because they don't qualify. So don't weigh heavily on it is what I tell most people. What you're going to need to do is, I want to see that, I call it skin in the game. You have something in your savings checking account, 401k IRA, just something to say that, hey, I have some type of reserve, and it looks better for the lender. As a loan originator, any loan originator is to paint a picture for the underwriter. So being in this industry for so long, I've worked my way from the bottom up, from the processor, being a loan originator. I went from the closing side, underwriting side. I've worked all aspects of all the people that it takes to get a loan closed. I went to school for appraisal, not because I wanted to be an appraiser, but because when my appraisals come in and you send it to the underwriter, something is wrong on that, it'll kill the deal. So I needed to learn how to read it. I never wanted to be a real estate agent because, as you did, I want to make sure that I want to be in control of the money. I want to make sure it's going to close. And I needed to learn how to read a contract. So I went to classes to see what a realtor had to learn in order to understand a contract. So that way, when Tramaine gives me a contract, I don't have to ask her 50 million questions. I know what it means, and then I'm able to articulate to her, okay, this is where this client is. And we partner up to help that individual because, again, your situation is not Shell's situation.
Yeah.
And so every individual is going to be looked at different. And so if I'm going to cater to what you need and to what Shell needs, and then I'm able to get with your agent and say, Tramaine, hey, this is her situation. This is what we have to do for her, whether it's credit, whether it's income, whether it's, okay, well, we need to get the down payment assistance. I'll let her know. And I love the connection with the agent because I have someone to reiterate the importance of getting me documents I need to get your loan closed. And she knows exactly what's going to go on and what I need for the next step because she's been doing it so long. She can say, hey, it's another form of following up, and you have a team working for you for your overall goal.
So I want to pivot a little bit. So a lot of small business owners, when they talk about purchasing a home, they've heard from someone that they can buy a house and put in an LLC and they won't have to use any of their documents because the business owned the home. Is that a myth or?
So there's the SBR loan. But that's more of investment property. But if this is going to be your homestead, your primary residence, you're going to have to get documents. And Tiffany probably can talk more on that. But when you use the LLC, they're still going to
vet you.
Right. Yeah. So if you're going to use the LLC again, DSCR is one of the biggest things. I actually love it. Those loans are so easy. But if you're going to be owner occupied and you want to put it on an LLC, you're going to still have to show the income. You're going to you still have to qualify. You have to qualify.
Okay.
So it's not,
that's a myth.
Yes.
Okay.
And a lot of times what I do is if they're using a LLC, we have to get involved with your CPA. Because sometimes, hypothetically speaking, things may need to be filed a different way or refiled.
Right.
Yeah.
Okay. Cynthia, is there any other myths that you know of? I know I haven't.
I think sometimes people get confused with fixed rate and flexible rate. You know, back in the day, they used to do the balloon rate to kind of get you into the house, the way you have a lower payment. Maybe talk a little bit about that.
So there's the ARM and the balloon. Let me say it like this. That's what we had the mortgage meltdown, what it was back in 2009?
Yep.
Because of that. We were getting a lot of uneducated individuals into these type of loans that will tell you come back of saying, oh, I'm unaware. I didn't know this was going to be due at this time or this was going to change. I get a qualified, educated individuals, even if I have to educate you myself of saying, hey, this is what this means. I'm not going to just throw the average person into an ARM or a balloon note because you have to be prepared. You have to have, again, if you're getting a $200,000 home and you're, in a 10-year balloon, I have to see in 10 years that you already have started preparing where you have an IRA, 401k, some type of asset that you can be able to, in 10 years, this money is still sitting here and you can pay that balloon. Because other than that, I'm doing you a disservice.
Okay.
So basically, interest only is just saying that the interest accumulated every month is what you're going to be paying. You're not touching the principal. When an average person comes to me and they want to buy a home, owner-occupied home, like Tramaine said, there's principal and interest, what we call P&I. But in the mortgage industry, there's PITI, which is principal, interest, taxes, and insurance. That's your note. When you're going to be paying your note, it's your taxes and insurance as well in that note that you're paying. So when you're doing an interest-only loan, whether it's a 2-year ARM, a 3-year ARM, or a 10, 5-year balloon, you're wanting to make sure that, hey, you have money that's sitting somewhere. And I don't advise people if you don't know finances, don't touch it.
Okay.
I mean, I 100% agree, Tiffany, because that when I got into the industry, I was doing refis.
Yeah.
And actually, it was with small businesses, or most of the things we did was with people that were 1099. And 1099 mean they're not W-2, they are self-employed.
That's right.
Or contractors. And the subprime industry started, I think it was initially used for people like that, but they started using them on people that were W-2 and had regular jobs.
Okay.
But I think the biggest thing is how you are now is how you will be tomorrow.
Yeah.
And so if you have an issue right now with budgeting, if your business is shaky, it's not good to get an ARM. It is not good. It only works in certain scenarios. Like we're naming these type of loans, the non-QM, DSCR. These are built for investors. And the arm is not necessarily built for investors, but that means it's going to be a shift later.
Yeah.
So just be mindful and listen to your loan officer about these type of loans, because you may qualify for it or you may not, or it may not be good for you. But if your business is stable, depending on what it is, it's probably not a good vehicle to get a loan.
Right.
Now, one of the questions I have is, for like builders, like new developments, as a small business owner, I know sometimes these builders, they might have incentives, to purchase their properties. From your experience, do they work with small business owners also, or typically those who are more employed?
Well,
Like when
if
it
you
comes to the
qualify,
incentives.
everything is if you qualify. So you can be self-employed and qualify for
And
a loan.
still qualify.
And if you qualify for a loan, you can go get just about any house, whether it's a builder that has a house, or and still get those incentives.
You can still get those incentives.
Yeah, I think they're more concerned if you're going to actually move into the home.
Right. And
They don't care if
Yeah.
what type of loan you get, as long as they know when it's time to close, you're going to be able to come with your check.
Well, I'm glad you mentioned that, because I do know one of the terms that I hear a lot in these investment groups that I go to, they talk about rent hack. So if they purchase the property and then rent, is that a myth, or is that something that actually can happen for a business owner?
Oh, it is. And what did the kids say? Clock the T or whatever.
Right.
But that we don't use it. I don't see it used as much in Texas. It probably will be, because our prices are through the roof now.
Yes.
It's more I see in East Coast. So you have something called NACA. There's other programs. NACA is, once again, it's a long drawn out program. You're not gonna go today and get a house tomorrow.
Okay.
It'll take a long time. But what they're doing is they're taking sometimes duplexes, or now they have what ADUs. I'm bad with acronyms. ADUs. They're taking a single family home and converting it over to a multi-use. Yeah. So you can do that. Of course, you have to notify the bank about it.
Yeah.
But we do see it where people are buying homes, or they're getting FHA loans, and they are actually using it to buy duplexes, and they lease out one spot and they live in the other.
Okay.
But but once again, if you have no money, that's not
the route to go.
Right. So what I want to say, and just for any borrower, no matter whether you're W-2 or self-employed, again, preparation is everything.
Yeah.
Education is very important. So you don't just wake up one day and say, "Oh, I want to buy a house." You're going to prepare for it.
Yeah.
Even though we know there's people that do that.
Yeah.
I thought, okay, well, it's good. I'm glad that you woke up and you decided you want to buy a home. Now let's prepare you for it.
Right. Yeah.
That's when you are buying a home, your biggest advocate is that lender.
Yeah.
Because the realtor, we can't sell you a house you can't buy.
That's right.
And so I would build a relationship with the lender, because that's going to be your friend. And the biggest thing is don't give up. And we spoke about this, Shell. I have a client, first time home buyer. I'm used to lease. She bought a home with her wife. And didn't even think that could happen, right? She thought that was a barrier because, she was the part of the community, but she was able to buy a home. It took us 6 years. I had another client that took over 10 years.
Yeah.
So don't give up.
Yeah.
Do not give up.
And one thing I want to say that it's really not, people don't hear about it a lot. As a loan originator, you're licensed. You have a federal license.
Yeah.
The reason we ask, and we may ask for a lot of things, and as we're preparing and helping you to prepare for a loan, if you close a loan and that loan you don't pay that mortgage, these lenders can make us buy back that loan, whoever is holding our license with.
Wow.
And so a lot of people don't know that. So yes, I want to be thorough. I want you to be educated because I want you to keep that home because I
I'm
don't
not
have
trying to
no
pay that back.
$500,000 sitting around or losing my job because my
Right.
financial institution had to buy back a loan that
Wow.
you
I didn't know that.
I didn't know that either.
default on.
It's easier to get a master's degree than it is to get a mortgage license. Yeah.
It's it's a lot of responsibility
It
that
is.
comes with it, and license you have to take the exam just like you guys. But you're playing with people's money. This is a federal, it could give you Fed time when you these defaults happen
Yeah.
because a lot of these lenders will think that, oh, you knew
Yeah.
that they weren't going to pay, or you falsified documentation to get them in. So not every loan is a good loan.
That's a good point because especially I heard you mentioning like undocumented loans and things like that. So for those business owners who may be using payment processors as their bank system, what does that look like when it comes to vetting their financials?
And that's why, like she said, Tramaine mentioned, being with your CPA or tax preparer is very important because I don't only want to gather documents from them, I want to be able to speak to them as well to say exactly what I need. It's very important that I get the initial documents that I ask for. A lot of people want to give you a lot of fluff, and I don't. I'll go through each of them and like, okay, yeah, I can't use this. I need this. I think it gets frustrating. It gets stressful for the client.
Yeah.
But it's very important for them to know this is really why we need this.
Yeah.
Our second line of defense is the underwriter.
Yeah.
To look again that we collected the correct document.
That's good. And I think that kind of leads us on to why we're starting this. We are building those educational workshops so that people can get plugged in, understand exactly what's needed and that preparation phase. I do believe that's very important because I know for myself as a business owner, when I would see home buying workshops, I didn't think that I qualified for that because I was a business owner. So my mind was like, oh, that's not for me. So until someone actually tied business to the name, then I was like, oh, that's for me. But that is a huge misconception because as you're saying, what I'm hearing from both of you is that we're looking at the financials, regardless of if it's W-2 or 1099. We want to see the stability and the ability to be able to pay. So that's really, really good. Tiffany, Cynthia, did you have anything else you wanted to add?
No, I think also when it comes to home buying, I think the individual just needs to sit down if it's what I want to do. A lot of times people get pushed into buying home. Having a home is not free.
Yes.
And I think on both their parts, even as a realtor and the financial side, it's education. Taking your client and making sure that you want them to be successful in their home. You want them to keep their home, but also realizing home buying is not good.
Yeah, and I have a small story with a client, and we've seen this over and over again. I had a transaction. I represented the owner, where it was a waiter, a young Hispanic lady. She was like in her early 20s, and she had an absentee agent, so that means I was interacting more with her than I felt comfortable with doing. She made, I think, like $2,500 a month.
Okay.
We were able, this was over 10 years ago, of course.
Right.
She bought a townhome in Cattails, in Southwest Houston. It's a townhome subdivision. At the time, those properties were going $30,000-$40,000. So with the monthly interest rate and everything, with the monthly HOA dues and her mortgage note, her payment was like $536.
Wow.
And I'll never, and I was thinking her payment is so small. But do you know now they're almost, it's worth almost $100,000? So here you have this waiter that was able to do that. Now, it was amazing. The lender, I have to shout out because typically lenders, it's hard to do loans under
that small.
But they were able to do it. I have another story of another young lady who purchased a condo.
Yeah.
When I met her, she was leasing out that condo to purchase another townhome in Cattail.
Yeah.
Now that lady owns a duplex in University. So you may not get what you want right now, but you can always stair step.
You can
So,
start.
Yeah, just get something, lease it out, and that the lender can add that as your income.
That's right.
Yeah.
Starter home, basically.
So
Do you
from your experience as a realtor,
do you think it's more difficult when you have a client who comes to you who's been living, like you said, in the winery, and now they have to move, to a different.
Of course, it's where I see this is people with kids.
Okay.
And we talked about this.
Yeah.
Majority of my first time home buyers are single women. And some of them have kids. When you have kids, you are moving sometimes in that area because you like the schools. And so when you are living in an area that's outside what you can qualify for a mortgage, you have to weigh those options.
Yeah.
And so that hinders a lot of people from buying a home because I don't want to move in that neighborhood.
Right.
Yeah, but
Yeah.
But as a single person, you can stair step. You may not like the home, just get a big dog.
Yeah.
I'm in the area.
Right.
And some tools. But when you have kids, then that's when it becomes difficult because now the kids are locked in the school. They know the neighborhood, and it's hard for them to move out. And that's an answer I don't have. But that's I run into a lot of people that have that issue. I have that issue.
Yeah.
But what we don't want to see, and Tiffany can attest to this, is we get a call, you can't afford this home.
Yeah.
And it is very hard when you have to foreclose on somebody because then they start blaming you and everybody else. When we told you, but you
you couldn't afford it. But
So,
because I think we kind of touched on it earlier, but I do know, like, if I'm paying $5,000 a month in rent and the mortgage on that property and insurance, like all of the PITI might be $3,500. And I'm like, I can afford this house. What do you mean? And then Tiffany will come back and say, no, you can't. Like, so how do you have that conversation? Like, is it something like it's just far-fetched now, or maybe in a few months you'll be like, because I think they want to know. I know I want to know.
Right.
Right.
Well, I'm glad you mentioned that because I did have that situation just recently. And it was from business owner.
Okay.
Because they were renting in a certain neighborhood, they wanted to stay in that area.
Right.
But what they didn't realize is, rent is different from owning. And what they have to realize is we also look at your debt to income ratio. Even though you can afford something, and the debt to income ratio is your bills versus your income.
Okay.
And so let me make sure I say that right. Your debt to income ratio is your bills, the current debt, and then your income. So when I'm saying your debt, it's meaning not just your home, which you're going to pay PITI. If you have a credit card, if you have a car note, if you have a loan, we take all those monthly payments, we add that up and divide that by your income. Okay. And it's going to give us a number. 9 times out of 10, if you're on a conventional loan or Fannie Mae, it has to stay sometimes under 41. Sometimes it could go as high as 55 or 56. But it can't exceed that. And that's the determination of how much you can afford to purchase.
Okay.
On the lending side of things. And so that's why we give you that cutoff amount. But again, I want people to understand that when you're renting, that owner in Tramaine probably can, can elaborate more on that side of it, because the person that your landlord is not looking into all these other factors.
It's a fixed rate.
The bank will. But what happens is they wanted to stay in that gated community, which was a very nice area. And, I wanted her to stay there, but she couldn't afford to stay there. Yeah. So again, everything is preparation and education. And I know I keep going back to that, but it's so that the entrepreneur could know or that this is what I need to do. If I want to stay in a certain area, I need to make this kind of money, or I need to have this type of savings
Mhm.
to where I can get in there. Because again, and I know for agents, they're like, when they ask the amount, a certain amount for what they qualify for, going to see $1 million home is very different from a $200,000
Oh
home.
yeah, absolutely.
And I don't want to, once you look at that type of property,
You don't want to go back.
anything
Yeah,
else.
you don't look at it. That's true. That's true.
Yeah.
So, and I'll ask you because that's very clarifying.
Mhm.
So if I'm able to pay rent and we said like $5,000 a month and the mortgage is $3,500,
Mhm.
but the mortgage isn't, even though the interest is still not a fixed rate, right? Because
Mhm.
isn't every year
Right.
something can change to raise
Not
your
on
mortgage?
your mortgage. If you
Or
have a
your-
fixed rate mortgage, the only
Mhm.
thing that's going to change is your insurance or taxes going up. So people, I always tell, again, that comes with education. If your loan officer is going to not just put you in a home and say go, they're going to tell you, hey, once we close,
Yes.
you're going to pay out that insurance and taxes for 1 year. I always tell them, now look at your note. Anytime you see your note go up, it's not that your rate has changed. It means that your insurance probably went up or the property taxes. So what you do is you call your insurance agent and get it requoted.
Okay. Okay. So is there any instances where you've seen clients where they could not afford the or the whole payment as a whole anymore? Because
Life happens, yeah. So that happens.
like their income stayed the same.
Mhm. But they probably increase other debts.
So is that something that you look at as well whenever you
won't
go
see
to
it.
purchase a home?
Well, we have to look at
Like
the debt.
market changes?
Yeah, you can, but I don't know where they're purchasing it. Like she said, if I give her a pre-approval or pre-qualification, it's going to be determined because
Okay.
they haven't.
So that's not a factor.
Not when you're coming to me.
Okay, good.
Sometimes this is where we've seen a huge increase in payments when their home is rezoned is a 500-year or 100-year flood zone. We have seen some people payments jump up because it's what she's mentioning is when you have an escrow, that means when you pay less than 20% down, the bank makes you put your taxes and your insurance in the escrow.
Okay.
So they collect for a year and then they make the payments. I hope I'm saying that right.
Yeah.
You are. But sometimes we see where their payments could be $2,500. Then next year their payments jump up to $35. And so what you do, you can call your lender, but also call the escrow to see what happened. And when we see that, a lot of times the taxes were not assessed well when they close, and the tax is not assessed well typically are new homes. You've been rezoned and now we're not in the flood zone, a FEMA designated flood zone, and now you are.
Right.
So those are some of the things, but life be lifing, sometimes right now we're going through an increase, and so taxes will increase. So that's why I tell homeowners, participate in your HOA, go to city council meetings, go to these meetings dealing with your taxes, because each time these school bonds are put up and they're talked about, that's affecting your payment.
Yeah.
Each time the city wants to invest in something, that's affecting your payment. So just stay in the know of what's happening in your neighborhood.
So like the young lady you mentioned where her house appraised,
we had to sell it.
She had to sell it.
And we went through this a few times. This particular situation happened before and then we've had a couple situations after Harvey, of course.
Yeah.
Where their areas were rezoned as a flood zone. And so the insurance, if they know that area is in a flood zone, they're going to make you get insurance.
And I think also educating them to how to protest their taxes.
Yeah.
Like I got my taxes with a 28% increase, so I almost fell out. So immediately there's a couple ways you can personally do it yourself, but there is a deadline, knowing when that deadline is in your district.
Yeah.
And secondly, there are companies out there, in my understanding, that will also protest your taxes for a fee.
Yeah.
Oh, okay.
Or you can just call your realtor and ask for a market analysis.
Yeah. That sounds easier.
But in areas where we know it, you know, there's an increase. Yes, you do need those services. But right now is a good time to protest because the prices are dipping a little bit. So.
Okay.
Mhm.
Okay. Well, this was good.
Mhm.
I'm glad that we were able to address some of the myths, some of the comments that I seen online, or some of the questions that I asked. So that ties us into our next, what's coming up next. So
Okay.
what do you have coming up? Do you have any events coming up where any of the people can engage with you, or how can they reach out to you if they want to start that home buying process?
So anybody can reach me on my cell. It's 281-744-3095. I don't have anything coming up immediately, but I'm always available for a phone call, consultation. I'm here.
What about you, Tramaine?
Well, Tiffany and I, we're trying to get together.
Right.
True.
To get some events going. Hopefully we'll have a home buying series. I teach also realtors. I teach land transaction class. Believe it or not, most of my sale up until last year is land.
Yeah.
And I'm scared of roaches, but I love land and new
Welcome to
homes.
Houston.
Yeah, I'm from Houston, sad. But those are the things that I work on, and I have my real estate brokerage. But I think education is the key.
Yeah.
If you guys are business owners and you're looking to buy a home, attend home buying class. Ask all the questions that you can. And then that's how you know if people really know what they're doing.
Mhm.
Yeah.
But Tiffany, she's been in the business for a very long
Yeah.
time. The fact that she's still licensed after 30 years, that lets you know she knows what she's doing. So always go with somebody that's professional that'll sit down with you. But that very first person, you can call a realtor.
Yeah.
But the first thing we're typically going to do, if you need a loan, we're going to refer you to a lender. So, but my information is, my number is 713-443-3423. And my website is my name, TramaineChatman.com.
Cynthia, did you have anything you wanted to mention in our
No,
closing?
I
Do you
did.
have anything coming up at the ranch?
What do we have coming up? We have lots of things, but we do have a foundation. It's called the Run for Wishes Derby fundraiser, which is on Saturday, May 2nd from 4 to 8. And I think they are selling tickets online. If not, you can feel free to call me at 713-553-5899, and I will get you in contact with you.
Wonderful. Well, if you are a small business owner, do not count yourself out when it comes to home ownership. Just because your journey looks different, it doesn't mean that the process without more planning can't help get you there. I want to thank you ladies for both coming here today, this morning, and spending your time with us. See you next week.